Good morning, traders, and welcome back to the Trader Bacon Show. I am your host, Gates Adams. And first and foremost, want to congratulate last week's winners of the evaluations. We have Marlins, Dwarian, and Techie. I'm hoping I'm pronouncing all of those correctly. So congratulations to you guys. You should have gotten your email with all of the details on that by now. And just remember, we will be giving away 3 more evaluations for this show. You will see the... You'll see the link in the chat here in just a moment, so make sure you get that filled out before the end of the show so you have a shot at winning those. Also, wanted to remind everybody, Apex Trader Funding has 80% off for 2.5 more days, basically until Wednesday at 11:59 p.m. Eastern Time. 80% off, as well as $35 resets on any size evaluation, so make sure you take full advantage of that. Great time to add to the arsenal, or if you have been hesitating for whatever reason, it's a great time to get in and get those first evaluation or evaluations, depending on where you are in that process. But make sure to take full advantage of that before things go back to normal. Today, I have an exciting guest for you guys. I know one of the big goals in the world of trading is to quit the day job, to fire your boss, whatever verbiage you like. And we've had quite a few traders over the last almost a year and a half, I guess, that have been in this position. But it's always a great highlight to just see what that possibility really could mean for you if this is one of your goals, and to have a chat with somebody who has actually done that. Without any further ado, let's bring on today Ben on today's episode of the Trader Bacon Show.
Welcome to the Trader Bacon Show, where we showcase everyday traders that are getting funded, paid, and bringing home the bacon. Are you ready? Because the Trader Bacon Show starts right now.
Ben, good morning. What's up, man?
Hey, Gates. Good. How you doing?
Excellent. Thanks for joining us today. I definitely appreciate it. And first and foremost, I'll kind of intro you with the whole premise of the opportunity that trading really can provide people to, quote unquote, fire their boss, move out of the rat race, the 9 to 5, whatever the case may be. We were actually just talking before the show. You live in Southern California. I lived there for 16 years. What has happened, transitioned in your life in terms of like quality of life and time and freedom, being in a place where like hour and a half commutes are more the norm than they are not, by being able to just work at home, trade for a couple hours, and live your life? How's that been for you?
I mean, yeah, it's pretty amazing. The flexibility that trading can offer is truly incredible. And I live, just a few minutes from the beach, and I wake up, walk up to my desk, trade for a few hours, get to take a break, get outside, walk the beach, come home, get back to the charts, really just kind of structure my day however I want and how it fits that day.
Well, and I think this is one of the beautiful things about trading. You describe kind of what a lot of people would see as a perfect day, right? Different people have different designs on what that might look like, but the reality is that having that time freedom and having that financial freedom really opens up a lot of options. Now, some may just end up staying at home gaming all day. Somebody might want to spend that time in the sun, hanging out at the beach, hanging out with kids, family, whatever the case may be. And I think that's the beauty of this process, is you really get to define that for yourself. So let's take a step back a little bit. How long did it take you to get here? Really, at this point, how long have you been trading?
So I'd say my trading journey more or less started back in 2017.
Mm-hmm.
Kind of like when Robinhood kind of started to take off. I got into buying some stocks. I had some buddies at the company I was working for. We get together over the lunch hour, talk about what tickers, we were looking at, what IPOs were coming on, investing, such a small percentage of, whatever paychecks we were getting, and started to just kind of really enjoy that process of like doing some research and listening to some financial podcasts, everything else. A lot of what we were doing was like news-based stuff, sentiment stuff. Wasn't really doing any technical analysis at that point, but spent a few hours, kind of a day getting into that. And then kind of fast forward to getting into kind of COVID times. Mm-hmm. My job had become remote and I was getting to travel around a bit more. And in 2021, I went to visited California, ended up staying here after I was here, but lived with my cousin for a little bit, and he started showing me some of the options trading that he was getting into. And I didn't know the options world at all. So I started to sit down with him every day after work, and he was showing me what he was looking at. Started to learn, some ATR, some Bollinger Bands, VWAP, all of this sort of technical analysis that was new to me. But at the time, I was working as a data analyst for Microsoft and Amazon, so I kind of had, that data background, so I kind of took to it pretty easily. So started spending my mornings before work, getting into some zero DTE stuff on the SPX, doing some Apple, Tesla, all that sort of stuff. And then found that I was really excited to get up in the morning to kind of do that stuff. But then once it transitioned into, my full-time job, it was like, that was a drag. So I kind of always had it in the back of my mind that I wanted to figure out a way to be able to do that full time. Sure. So I spent probably a year and a half kind of going back and forth trying to do both. And then I finally got the opportunity where the job I was working, I shifted it to be just more of a contract work. So I could set my own hours a little bit more, cut it back from, 50, 60 hours a week down to maybe 20 or 15. So I could spend all morning trading. And then I could just, when I was done trading, hop over, spend a few hours as a contractor, getting some work done. And then that, 20 hours a week turned into 15, turned into 10, turned into 5. And then all of a sudden, all I was doing was trading. And it was a transition that happened slowly, but then all of a sudden I was like, man, I guess I'm, full-time trader now. I don't have anything else.
So as you were making this progression, were you starting to see more wins as a trader, or was there more of a leap of faith as you started to decline the other side of that work life and really just make that commitment? How did that happen for you?
Certainly a leap of faith. There was some times where I was like, I guess I need to go, start taking the interviews again. I need to go back. It's such an up and down process. And multiple times didn't know if it was going to continue to work or not, and had to switch strategies, moved from options to futures, had to try a number of different things. And then finally everything just kind of all started to click. So how did you handle those ups and downs? Because when we start talking about the foundation of our financial well-being, I mean, this is scarier than most instances of trying something new, so to speak, right? And we look, everybody who's traded for more than 5 minutes has experienced the roller coaster, the ups and downs that really are a part of the world of trading. And as you were scaling back, as you actually finally left and were officially, quote unquote, a full-time trader, how did you survive the rough times psychologically and mentally? Well, you have to have a really great support system. And if you can get a good community, good people around you. I was fortunate enough that I was brought into trading with a really great trading partner. So I've had him since the beginning. Sure. And I think that that's something that's so key. I know trading can be such a individual, isolating, solo endeavor. Right. But you really need to find someone that you can lean on, someone that can speak your language, someone you can bounce ideas off of, someone that knows what you're going through, has maybe somewhat a little bit different of a background of your own, that you can lean on for things. So for me, I know I wouldn't have been able to do it if I didn't have, that really great trading partner right from the beginning.
I think that trading community is such a key component. And I've often said that sometimes traders have more monitors than they do friends, particularly friends that they can have a conversation about trading with. And it can be very isolating. It can be very lonely. And I got to tell you, this is one of the reasons that I love doing this show. Some of my best friends in the world of trading at this point have come from guests that I've had on the show. And that is absolutely a huge factor in terms of just maintaining that enthusiasm, because listen, you really got to be in it if you're going to make a go of this thing, right? So having those people that you can talk to, that can help support you on the rough days, that can help you celebrate on the great days, and everywhere in between, batting ideas back and forth. I love that. I love just that conversation about that trading community, because it's, in my opinion, it's one of the key factors. So at this point, you started off with stocks, did a little work in options. I know a lot of people love to move into options because of the quote unquote leverage that you get. And then of course they get slapped with the Greeks, and it becomes a whole other dynamic of things. And then that's where I think a lot of times people land either in Forex or futures. And so as you went through this evolution, what you learned at each step, was most of it applicable through the different instruments, or did you almost have to start over in terms of developing the strategy with each step?
There's things that are transferable across all of it. Obviously, the psychology piece, the money management, risk management, that's always going to carry through with you.
Right.
But making the switch from options, at the time, what I was doing was a lot of selling premium, like trying some different iron condor strategies.
Sure.
Had a really great win rate, but then you would come across a really bad losing day, and was kind of struggling with that process of kind of overcoming some of those large losses mentally.
Right.
And then it was just a little over a year ago. I actually stumbled upon an ICT video that was talking about time-based liquidity. And I was like, that's kind of interesting. Like, I haven't really been looking too much into that. And then I went down the rabbit hole of his 400 or 500 YouTube videos. And
oh yeah, there's tons.
Yeah. Got my trading partner into that as well. And then we just devoured it, spent, 6 months just consuming as much content as we possibly could. And then felt that type of trading was a lot more the price action analysis, everything, versus trying to just live in the Greeks and trying to have these crazy spreadsheets and Tableau dashboards that were doing all these crazy calculations for us, when it's like, no, everything you need is time and price, and it's on your chart trading view.
Well, and I love that you mentioned that your partner and you went together on going down this path, because again, I think a lot of times that communication and the types of conversations that you can have really will help make a difference. If you guys are on the same page in terms of your strategy, I think it makes it a lot easier to support one another in every other aspect of that. So, everybody loves talking about ICT when they're ICT people. Well, actually, I think everybody loves talking about ICT. Either they're super fans or they're like, this is like the most insane thing I've ever heard in my life, right? I love ICT. I love some of the concepts that I've learned. I am not a strict ICT trader, but I think that there's been so much that has been added to my world of trading and my strategy by understanding some of these ICT concepts. Why don't we take a look at some charts and really see where that lands for you and how that's actually been paying off and giving you the flexibility and opportunity to, well, let's face it, be a full-time trader. As full-time.
Yeah, for sure. Yeah.
So let's have a look at your charts here. I love that you do the 2 shades of green on there. I know I see a lot of YouTube videos that do that. Take that red green thing away from it. I haven't quite gotten to that point yet, but share with us a little of what we're looking at here.
Yeah, obviously charts give it away as soon as I share it at ICT Trader. So I use a number of ICT concepts, but I wouldn't say that I follow any specific model. I've just kind of taken a few of the things that he talks about and kind of developed my own system that I run.
Sure.
I know one of the first things that I do differently than most people I see online is I don't start with, say, a weekly, a monthly, a daily, and try to form a bias.
Okay.
I am not someone that trades with a bias. I find that I don't try to predict the market. I just try to position myself.
Okay.
So I mostly focus on the idea that he presents that the market only moves for 2 reasons. It goes to an inefficiency or it goes to liquidity. So I try to frame the market. I use a 5-minute chart, try to understand where the liquidity is that it's going to be reaching for, and then I will use inefficiencies to get into my positions. So I tend to look back usually only a day or 2 in price. And I use the different sessions. I like to look at the Asian session, the London session, the New York AM, and the New York PM. So I'll be looking back anywhere from 3 to 4 sessions back from where we are.
Okay.
And what I want to see is where are those levels. So I trade a pretty clean chart. I just have a few indicators on here. I don't do a ton of annotations. I just like to know where are those highs and the lows of those sessions and where are we at in correlation to those. So a trade that I would have liked to have seen last night is here we ran the PM low from Friday, and we are no longer starting to see any new fair value gaps, any order flow beyond it. So that's where, we'd look for a reversal off of this area.
Right.
So we ran it down here. Here's a little imbalance. So I'm like, all right, if I believe that this liquidity below the New York PM session has been run, and now we're going to go seek liquidity on the opposite end, where is an imbalance that it's going to trade back into where I can get myself a low risk entry and take that to the other side. So this would have been, a little imbalance right here. You can see we traded down into it, and then now we're heading back up, and I would have been targeting, the London high. Of course, this happened at 2 a.m. my time, so I didn't take it, but these are the types of things that I'm seeing happen, every day. So just looking, what are those 3 previous sessions? What's been run? What hasn't been run? There's no kind of really strict setups that I'm following. It's just entirely based off of those two concepts. Where's the liquidity and what would be a good low risk entry for me.
Now, for those that haven't necessarily listened to a whole lot of ICT, I know that there's different types of imbalances that one would look for. Obviously, you mentioned the gap in the actual in the bars. What constitutes an imbalance for you?
It would be a fair value gap or a gap from the close to the open of the next candle. So I use a lot of fair value gaps. So this would be an example of just an imbalance gap between these two right here, that it's run away from it. And then at some point, I like to see it come back, fill it in. Same thing down here. I also like to use a lot of inversions. So that would be if we form a fair value gap like we did right here. And then we trade back through it, we close above it. Now this here was a fair value gap on the way down. Now we've traded back up through it. Now it's an inversion zone, and I will use that for an entry to go long as we tap back into it. You can see this time there was 1, 2, 3, 4 chances to get into that after a reversal. So this is one of my favorite trades right here. Is we ran a time-based liquidity level. We printed one more fair value gap. It got inverted, and then it offered a few more entries on the way out.
Gotcha. Now, as you go through this process, what actually triggers an entry for you? Because, I don't know if it's just the way that you have your chart set up, but it looks to me like there's a whole lot of gaps between these things that I don't see on a 5-minute, because I trade NQ as well, that I don't see on a 5-minute NQ chart. I'm not sure if that's just kind of a settings thing, but when you go through this process, what actually triggers that entry? So you go into this inverted fair value gap. Are you going to take it on the first up bar, first 5-minute up bar? How are you going to structure your stops, your targets, and things like that?
Yeah, for sure. So first thing that I'm looking for is have we run a liquidity level? So it's yes, okay, we've run this one here. Now, are we going to continue to stack and move lower, or is there going to be something that's going to indicate to me a reversal? So if I'm sticking on a 5-minute chart, here was, the first city, that was formed here, fair value gap on the way down. Is the next bar going to print another one? If it does, then I'll start to consider, a move lower. But if it doesn't, and then now this has been inverted. So this bar right here closes. Now this area here, I will call this my inversion area. And then now the first time after this bar closes that I get a tap of the top of it, I will just set my entry right here. So right on the top of this inversion, and I'll put my, stop somewhere down here, and I'm going to target, usually the next time-based liquidity to the upside. But one thing I'll say is I spend a lot of time looking at the data of my own trades and what I've been taking. And you got to find, kind of where do you fit? What's your style, everything else. And I am a fairly low win rate on a per trade basis. I win about 30% of my trades, but I have a close to a 70% daily win rate. So I'm not afraid to take a few stabs, at each of these trade ideas, because I do typically get somewhere, between 7 and 10 R on my trades.
Wow. That's significant. Yeah. So that is on a per trade basis, I'm shooting for, 7, 8, sometimes 10 R. When it comes out, in the wash and I look at, my September numbers, my R on the month was 3, so it's I have, a lower win rate, but I'm not afraid to take, somewhere between 3 to 5 trades a day. And most days, 60, 70% of days, I'll get that one trade where I can kind of get max value out of it. And a lot of that has come from I've learned to sit in trades. So for instance, had I taken this one overnight here at the top of this, and it's you're up, and then all of a sudden it pulls back and you've just lost, 80% of the value of the trade that you were in. A lot of, ICT videos, they talk about, moving your stop up. Once you get to 1 R, you move to a break even. Once you're at, 3 R, you go to take half an R. I really don't do that. I've learned with my kind of the way that I trade and my risk management and everything is I set my target, I set my stop loss, and I leave it there. And I don't do a lot of trade management within it.
I find if I add an additional variable for myself of like, hey, I moved it from here to here, and then it comes back and it just barely, wicks me out and then continues on. That was worse for my psyche than just securing that 1R. So this is just kind of like one of the things that I've kind of learned in my own trading journey that just works better for me. I don't see a lot of other people that do it this way. But it's all about, just getting into the stats of your own trades and figuring out what works best for you.
So that begs a question. So as you're going through your trades, if you look at the average time frame in a losing trade versus an average time frame in a winning trade, do you have a sense of how long you're in these trades?
Yeah, that's actually a great question because I look at that all the time. And my average losing trade is under 5 minutes.
Okay, so immediately it goes against you is when you're out typically.
Yes, and my winning trade average is just under an hour.
Wow. Okay.
So I have trades that take 4, 5, 6 hours. I'll get into it in the morning, and it doesn't hit my TP until just before the close. Or I'll put something in during the Tokyo session, and then I wake up in the morning and it hits sometime at 4 or 5 in the morning.
So that is a lot of faith in your trades. Being able to sleep through a trade is a different level for me for sure.
Yeah.
So let me ask you, obviously you're funded through Apex and there's the end of the day factor. How often do you get into a trade where you're running end of day and you have to make that last minute decision?
I guess to be honest, that final hour before the futures market closes, there just isn't a whole lot of volatility unless someone's, reporting earnings.
Right.
So for the most part, that 1 hour prior, I might still be in something and I'll tighten up my stops at that point. Just because I'm not expecting too much to happen. And I just don't want to think about it. Don't want to worry about it. So I'll either take it off or I'll just kind of tighten things up, or I'll definitely almost always pull in my take profit because I know it's not going to run, more than 10, 15 points in that final hour.
So you might find maybe a more recent swing, high swing low that might be a measurable target for that last hour.
That would be exactly what I do. Yeah. Like what was like in the current price leg that we're on, what was kind of the closest close. Like I won't even go all the way up to the high of the wick. It would just be like, hey, where did we close? Like, where's the body? I'll just put it right there.
Yeah. Gotcha. Okay. So obviously this has been working out for you. And I got to say, hats off on the ability to have a 30% win rate and maintain the mindset that it takes to continue making those good decisions. Because I got to tell you, one of the things that I've struggled with is, even 1 or 2, small losses will definitely affect the mindset. And then I start making less wise decisions, I guess. So how do you manage that almost disappointment? Is it just that you've done it so many times that you have faith in the strength of the system? Or is there some other factor that keeps you motivated to kind of get past the potential disappointment when you have a loser?
Yeah, I mean, it's like I accept the risk when I get into the trade. And I definitely had to get over the feeling of, you're in a trade and it came, 80% of the way to your take profit and then you had taken a loss on the trade. Like I really had to just kind of get over that. And the way that I really did that was just really studying the data of my trades. And it's like, hey, over the long haul of this, like over a month's worth of trading, it does pay off. And you just have to really trust in that. And I think really a part of this journey and the way that I was trading options, 2 years ago and really getting into that data and understanding like, hey, this is a long-term strategy and you have to do it day in, day out for it to pay off. That really helped me in this process. And it's honestly, it's not just learning to deal with the losers. It's learning, how to deal with the winning too. I had a period of time last month where I had my best 6-day stretch, I've ever had. And then you kind of start to get, a little bit bigger of a head and you're feeling good about things and you start to, loosen up on your risk management and whatnot. And then of course on the 7th day, I had my, worst losing day and learning to deal with some of those losses too. So it kind of goes both ways. And that's the fun part about trading is that you're never done. You're always learning. There's going to be something new you got to overcome. So it's great. And I love it.
Right. Well, 100% a continual journey. If you're going to be a lifelong trader, you're going to be a lifelong learner. I just don't think there's any way around that. And I love that you mentioned that I had to learn how to win too. I've made the comment several times in the show, but that really is an important factor, especially when you start looking at 6 to 10R or 7 to 10R, depending on how much you're risking on a trade. I mean, you're talking thousands of dollars on a single trade. And if you're multiplying that over multiple accounts, if you happen to hit a good run, I know that I've in my trading experience had that bulletproof feeling. And what do? You size up. And what happens when you size up? The odds get you, and eventually it's going to take you for a little bit bigger run. And then that can have that psychological impact of, okay, let me make up for this, and then I'll get back into the swing of things. And so anyway, I appreciate you sharing that. I think that that's a key factor. We have to look at both sides of the equation in order to make sure that our mindset's in the right place. Because at the end of the day, trading is a mindset game.
Entirely. Yeah. And I know for me, one of the ways that, I've overcome that is I use 20 Apex accounts. Mm-hmm. So I am only ever looking at one account. So for me, in my mind, it's like 1/20th of the size that I'm actually trading with. So if you take, a small loss or a small win, it's a much smaller number in my mind. So I don't get too wrapped up, in these larger numbers that, I effectively am trading each day.
That actually was a complete game changer for me. I remember, as I kind of got back into trading the beginning of last year, I really had this defining meltdown. And I was actually streaming my trading at the time. And the only difference between the previous day and this day was that I had decided that I had graduated to a higher position size. And I doubled my position size. I went from 1 mini to 2 on very small trades. And it just, my psychology just completely melted down. Well, a few weeks later, I ended up upping to 5 evaluations and going back to my original position size. And it was a completely different ball of wax for me. Just like you said, all I see is 1. So I don't have that position fear, I think, that kind of comes in when you either start going against you, or you take a loss or two, and all of a sudden those numbers are unfamiliar and uncomfortable, as it were. So I love that as well. Now, we obviously talked about the fact that you've moved into the world of you trading as your profession. Not necessarily a professional trader, quote unquote, but you trade for your primary income. At this point, because of all of the psychology, because of all of the things that you've gone through to get to this point, have you noticed any difference for you in the way that you trade, or did you initially, when that last bit of contract work, you said, I'm done and this is all I'm doing? Did you have any sort of a significant shift in results, or did you continue the route you were at?
It's kind of like when you're right on the edge of being able to make it work or not. And every day you're stressed about the money. You're like, I need to get in there. I need to make money today.
Right.
And I was doing that for a while. And I found if I sat down at my desk getting ready to trade and I thought to myself, I need to make money today, that was the worst possible thing I could be doing.
Right.
So things really shifted for me when, I went on a little bit, of a good run. I got the 20 Apex accounts spun up. I had gotten a good, buffer in each of them. And then all of a sudden I felt relaxed. It was like, okay, now I'm covered for a little while. I'm good now. So I can start to be more selective in my trades. I don't need to force anything. That's when the wins really started to come. Because if you're sitting down, you're like, hey, I got this bill coming up. I'm overdue on this, or credit card bill's coming. And you're sitting at your desk looking at the charts trying to fix that. You are only going to do damage. So you need to come from, a place more so of like a surplus mindset versus a scarcity mindset. So I think that is the hardest jump for any trader to get through, of that feeling of like, I need to make something happen today, going and being in a place of like, no, I'm ready to be patient. I'm going to let the market show me what opportunities are out there. And I'm not going to, try to make something happen just because I need it to happen.
Sure. Well, and I think this begs the question, and I think this is a conversation that a lot of traders look to have. And I'm going to preface this with the caveat that neither you nor I is a financial advisor, and this should not be considered financial advice. But based on your experience when you made this transition, do you recommend that if a trader is looking to do this, that they have a certain amount of time worth of finances in in reserves?
I would say like a 6-month reserve would be like the absolute minimum, really. I know from what I kind of gather online from the community and everything, like I was trading ICT for about 9 months before I really truly became consistently profitable, and making more than what I actually needed in a month. Because there's that point of like, hey, like here is my monthly expenses. Like I need to make $5,000 or $6,000 a month just to break even.
Sure.
There's getting to that point, which is a huge step and a huge accomplishment. But then there's getting to that point where it's like maybe you're making 3 or 4 times that. So it's like, hey, my lifestyle stays the same, but now I'm actually able to put more into the reserve.
Fabulous advice.
That point took me like 9 months to really get to of trading ICT.
Now, I would also say that there's probably a factor that comes into play of having traded a full year successfully, simply because you'll see differences between summer trading and winter trading, and the dynamics can shift. And we all know that, certain news will have more of an impact. And so having a full year of really capitalizing on all of these markets without having necessarily a significant financial drawback or drawdown going through this process is probably a good key factor in terms of making that transition as well, I would think. What do you think about that?
Yeah, of course. And I'll tell you, the home screen on my computer is Forex Factory, right? Like you got to know when the economic news factors are coming, and you got to know what each cycle looks like. And coming into an election year, that's going to be something new for me. Like once you've gone through like a number of these, you kind of start to get a feel for it. Like I know I will never trade the first week of January again. Like that, it's never gone well for me. Like I'm not going to do it. So you kind of learn, your little things, throughout the year, because it's not just the same thing every day when you sit down at your computer.
I love it. Well, listen, man, I was having so much fun talking to you. I got a little carried away here and we were a little past time. So first and foremost, I just want to remind everybody, we'll be back next week with another fantastic guest. And make sure that you have an opportunity to fill out those forms so that you have a shot at one of those evaluations that we'll be giving away from this week's episode. We will see you back next week with another great story, another great opportunity to learn and grow from somebody else's experience. I think one of the easiest teachers, if not necessarily the best. And Ben, man, thank you so much for sharing some insight with us. I wish you incredibly continued success. I know that we'll probably have an opportunity to continue to communicate outside of this, and I would love to see how everything's continuing to grow and develop for you as well. So thanks for spending some time with us today, man.
Yeah, thank you so much. This was awesome.
Awesome. And for the rest of you all, we will see you all on the next episode of the Trader Bacon Show.
Thanks for joining the Trader Bacon Show, where we showcase everyday traders that are getting funded, paid, and bringing home the bacon. Make sure to join us next time, Mondays at 11 a.m. Eastern.